Welcome to Uncovering Trust, a podcast by Edison Group. I'm your host, Will Manuel, and today I'm joined by Miloš Paps, Director of Investment Company Content at Edison, who will talk about Templeton Emerging Markets Investment Trust, commonly known as TEMIT. Miloš, thanks for joining us today.
Thank you. I'm looking forward to our discussion as although we have been covering the trust for many years, this is the first time the trust has been a headliner in one of our podcasts.
Okay, so before we launch into the trust, can we talk a bit about emerging markets?
Of course, for listeners that are interested, there is a series of articles about emerging markets on the trust website at temit.co.uk. According to the trust managers, emerging markets generate most of the global growth, and the disparity between economic growth in emerging versus developed regions is likely to widen. Factors favoring emerging markets include positive demographic trends, an abundance of natural resources, higher productivity due to wider use of technology and increased innovation, along with significant infrastructure investment. The managers suggest that an investment in emerging markets now is different compared to 10 years ago in terms of available growth themes. Current opportunities include electric vehicles, batteries, e-commerce, gaming, and digital entertainment. Despite their exciting growth prospects, emerging markets continue to trade at a substantial discount to developed markets, contributing to the managers' view that emerging markets are underowned, underestimated, and undervalued.
Good. Thanks for setting the scene. So moving on to TEMIT, can we start with a high-level view of the trust?
Well, first up, the trust is by far the UK's largest emerging markets investment trust, with a market cap of around £2 billion, and could be considered as a one-stop shop for investment in emerging markets. It was launched in June 1989, and its shares are quoted on both the London and New Zealand stock exchanges. The trust is managed by Franklin Templeton Emerging Markets Equity, which is a pioneer in emerging markets, investing with around $35 billion of assets under management. The trust has two managers who are both AAA rated by Citywire. Singapore-based Chetan Sehgal has been the trust's lead manager since the 1st of February 2018 and was joined by Edinburgh-based Andrew Ness in September 2018. Both managers have more than 30 years investment experience. Sehgal and Ness aim to generate long-term capital growth by investing in companies listed in emerging markets, or those listed in developed markets that earn a significant amount of their revenues in emerging markets.
Right. Thank you. So it'll be good to gain a more detailed understanding of TEMIT.
Sure. The trust performance is measured against the MSCI Emerging Markets Index. There are no specific restrictions on the fund's geographic or sector exposure. But to mitigate risk, at the time of investment, a maximum 12% of assets may be held in a single issuer, and up to 10% of assets may be invested in unlisted securities, a maximum 2% in a single issuer. Gearing of up to 20% of NAV is permitted, and the trust is subject to a 5-yearly continuation vote, with the next due at the July 2029 AGM.
Okay. Did I see a recent announcement about TEMIT involving derivatives?
Yes, indeed. In mid-September this year, the board announced that the managers can now invest within strict limits in equity options and equity contracts for difference, which will enable more flexibility and potentially lower costs in managing the portfolio's geared exposure to equities.
Okay. And are there any other developments that listeners should be aware of?
Yes, actually there are. In June 2024, the board announced a series of measures intending to improve liquidity in the trust shares and to increase shareholders' potential total returns. These were to at least maintain the level of the annual dividend, to repurchase up to £200 million worth of TEMIT shares over the following 12 to 24 months, a conditional 25% tender offer if the trust underperforms its benchmark in the 5 years to the 31st of March 2029, and a phased reduction in management fees.
Okay, that's interesting. So can we now turn to the trust's investment philosophy and their process?
Yes, the investment approach is very clear and straightforward. The managers focus on companies with sustainable earnings power, which are trading at a discount to their estimated intrinsic value. They can draw on the considerable resources of Franklin Templeton's emerging market equities investment team to assist with the three-step process. The first step is idea generation. The team has more than 70 analysts and portfolio managers based in 13 offices around the globe who undertake more than 2,000 company meetings a year. The trust managers consider that the team's local presence provides an important competitive advantage. Step 2 is stock research. Rigorous company analysis is undertaken to see if they fit the investment brief. The team's research platform has coverage of more than 700 companies. In-depth models are built to evaluate a firm's financial strength and profitability and to project future earnings and cash flow. Industry demand and supply models are incorporated into the analysis, along with country and currency macroeconomic considerations. Step 3 is portfolio construction. So the managers aim to outperform the benchmark irrespective of the direction of the stock market. Risk management is also an important part of the process, with scenario analysis undertaken to ensure the managers are not taking unintentional risks.
Okay, that all seemed very clear. So shall we now move on to the trust's portfolio?
The trust has a diversified portfolio of 60 to 90 positions invested across the market cap spectrum. All holdings are regularly reviewed to ensure analyst recommendations are up to date and reflect any changes in the company's fundamentals. The managers believe that given the wide dispersion of share price returns in emerging markets, they can generate alpha via stock selection, which is deemed more important than sector and geographic allocation. The trust top 10 holdings generally make up more than 40% of the fund. Portfolio turnover is relatively low at typically less than 20% per year, and the trust's active share typically ranges from 70 to 85%. This is a measure of how a fund differs from its benchmark, with 0% representing full index replication and 100% indicating no commonality.
Okay, thank you. And so how's it positioned versus the MSCI Emerging Markets Index benchmark?
So by geography, around 80% of the portfolio is invested in Asia, which is broadly in line with the index. Within that region, the trust has a meaningful overweight exposure to South Korea and underweight positions in India and China. Elsewhere, the trust is overweight Latin America and underweight the Middle East and Africa. Turning to sectors, the largest absolute as well as the largest overweight is technology. The biggest underweight is materials, while most other sector weightings are not that dissimilar to those in the benchmark.
Okay, so can we drill down a bit and can you give us some examples of names in the portfolio?
Sure. Looking at the biggest positions in the portfolio, by far the largest holding is Taiwan Semiconductor Manufacturing Company, commonly known as TSMC. It is the world's largest semiconductor foundry company and is benefiting from structural demand growth. The company has industry-leading technology, which gives the managers confidence in the resiliency of its business model. Other large holdings include ICICI Bank and Tencent. ICICI is a leading India-based private sector bank that is a long-term holding and has been a significant positive contributor to the trust performance. The bank has a strong franchise and is well positioned to benefit from India's robust economic growth. Tencent is the largest gaming, communication, and social entertainment platform in China. It should be a major beneficiary of the growth in artificial intelligence. The company also has significant public and private investments in China and across the world. Tencent has an active share buyback program, which is adding to earnings per share growth. Moving to some relatively new names in the portfolio, Nari Technology is a China-based supplier of power and automation technologies. The company is a market leader in China's power grid equipment industry, with its business spanning across the entire power system. Nari is expected to be an important beneficiary of increasing Chinese and global power grid capex, with overseas markets offering significant growth potential. Aether Energy is an Indian manufacturer of electronic two-wheeled scooters. The trust participated in the company's IPO. It was an independent startup and is now one of the 4 largest manufacturers in this field. Brigade Enterprises is a southern India-based property company, which is benefiting from rising real estate prices around the airport in Bangalore. Manufacturers setting up capacity in the area, leading to higher land values. Taiwan-based Zhengding Technology Holding is a world-leading printed circuit board manufacturer operating in a formerly fragmented industry. As technology evolves, the number of layers on a PCB needs to increase to accommodate more sophisticated applications, and these more complex products, unsurprisingly, command higher prices.
Right, thank you. You've given us interesting insight into some of the trust holdings, but what about the performance?
Well, in short, it is looking good. The trust managers are enjoying a strong round of relative outperformance that started in early 2022. This means that the trust is ahead of the MSCI Emerging Markets Index over the last 1, 3, 5, and 10 years. It also ranks highly among the 6 general emerging markets funds in the AAC Global Emerging Markets sector over these periods. Taking a longer term perspective, the trust is significantly ahead of the benchmark since its 1989 launch date.
Okay, it's very impressive. So we've covered a lot of ground today. Is there anything else you'd like to highlight before we wrap up?
Maybe just a few things. Number one, dividends. At the end of FY25, ending 31st of March, the trust had around £570 million in revenue and special distributable reserves, which combined are equivalent to more than 10 times the annual dividend. These can be used to enable continued dividend growth in years of low revenue. Number two, valuation, likely in part due to the trust's accelerated share repurchase program. The trust discount has broadly halved from around 15% at the start of 2025. Number three is gearing. Although the trust has a £122 million multi-currency 1-year unsecured revolving credit facility, gearing is currently minimal. On that note, I think we can come to the end of our discussion today.
Okay, thank you. That was a very interesting rundown. And thanks for a comprehensive session on this well-established emerging markets trust. You've been listening to Uncovering Trusts, a podcast by Edison Group. If you want to find out more about TEMIT and other investment companies we cover, please visit www.edisongroup.com.